Right now. Alrighty, so my name is Mackenzie Ray, and today I'm going to be walking you guys through our chapter 4 homework part 2. Specifically, this is exercise 4-23. You can probably tell that my voice sounds really raspy right now. I recently lost it from being sick, so hopefully you guys can understand me okay. But we're just going to go ahead and work through this problem as quickly as possible. So to start off, basically they're giving us the adjusted trial balance for this Faro company here for August 31st of 2017. And you can see we have all of these different accounts and the before and after adjustments, and also the debit and credit columns for each account. So what they're asking us to do here is to prepare the closing entries for temporary accounts at August 31st. So what I really like about this problem is that it's a super streamlined process. You can see I've already worked through it. I just wanted to make sure we had everything perfect before the video started. But to give you a summary before we start, we're basically going to start by closing the revenue accounts, looking at 2 of these separate accounts to get our total revenue. Then we're going to subtract our expenses from the revenue. So we'll be adding up these 5 expenses down here and totaling that into this income summary area. After that, we're going to be subtracting the expenses from our revenue, which is going to give us this number down here to close our income. And this will let us know what our retained earnings are. And finally, we're going to take our dividends from our retained earnings. And again, all of these numbers, of course, are coming from our trial balance sheet. One really important thing to note is that we're going to want to be looking for the after adjustment values, right? These before adjustment values are not really going to be super relevant for this problem. So again, to start, we're starting with revenues. So let's come up here and see we have 3 revenue accounts. One of them is unearned rent revenue, and because that's, excuse me, because that's a revenue that we're receiving in the future, we don't actually need to worry about it. So let's just look at service revenue and rent revenue, and we see these values of a little over 33,000 and a little over 13,000. So we're going to start by plugging these 2 accounts and totaling them out. Service revenue, rent revenue, same totals from up above that I just showed you, and we're going to add those together to get $47,030 for our income summary. Same idea down here, we're closing the expense accounts. You can see we have 5 different expense accounts: salaries and wages expense, supplies expense, rent expense, insurance expense, and depreciation expense. All of these values are listed in the debit column right here, all 5 of them. We have 18, 1, 22, 1, and 1,000, just about. So we're going to be entering these exact amounts into these last 5 column or rows down here in the exact order. And again, these are all going into the credit column because we want to end up with an income summary that is debited, right? Because remember, we're keeping both sides of this equation, the debit and the credit, equal. That's the same thing we did up here. That's why we start with these guys debited, because we want our revenues to be credited in the end. We want our expenses to be debited in the end. So we start this one in the debit column and then add all of these up in the credit column. So you can tell that this value of 44,415 is really just the total of these 5 expenses. Next, we're going to be subtracting the expense total, which is 44,000 just about, from the 47,000 that we had in revenue. That value of $2,615 is going into our income summary. This is going to tell us what our retained earnings is, which we want to be, again, a positive value in the credit column. So we're going to put that total of income summary in the debit column. That way we can keep the retained earnings on the credit side. Last but not least, we're going to take our dividends from the retained earnings. So we can see that our dividends up here, right, actually total out to $2,750. So dividends, being a credit that we're giving out, is going to $2,750 on this side, and it's taking from our retained earnings $2,750, which gives you the sense that we are going to end up with a negative balance at the end of this closing statement. But there you can see kind of the linear structure of this. Hopefully going through the problem, kind of like a rundown of its linearity beforehand, helps you sort of understand what we're doing. But there's the whole problem completed for you. Thank you for watching, and again, thank you for minding my raspy voice.